Hey, I'm Derek with LTC Tree. I'm here with my cousin Drew Nichols in California. What's going on, Drew?
Hey, Derek, we are going to do another video, a topic that's one of our top pages on our website. We've been doing this for decades. We kind of know what consumers are curious about, and we have realized that a tool that people are interested in these days is the hybrid long-term care insurance plan. And since we've been doing it for so long, we wanted to kind of talk about where it came from and really more importantly, why it exists today and why people should be taking a look at it.
Yeah, so a bit of background on who we are. I started in the industry in 1999, Drew maybe 2004, maybe 5 years later. So we've seen over a quarter of a century of this industry, and it started out with, I started out working for John Hancock, strictly doing long-term care insurance. And after a couple of years doing that, I realized, you know what, there's better options out there. Let's become a broker off, kind of shop the market, help clients shop the market for all the companies with one source. And we started doing kind of the virtual selling, 2004, 2005, before a lot of people even really were plugged into the internet. And we had a lot of success helping people plan for long-term care insurance with traditional long-term care. And so up until the financial crisis, long-term care insurance had no rate increases, although there would be on the very first page of the policy, it said these rates can go up. Up until then, nothing happened. And so everybody, all was good. But once the Fed started lowering interest rates, insurance companies didn't prepare for it. We saw some massive rate increases with these companies where the premiums just doubled overnight. And that was kind of set the demand for a product that would be a guaranteed premium. That was kind of the roots of where hybrid long-term care insurance came from.
If you buy a traditional long-term care plan, you're covering a huge risk of your long-term care expenses, but you're trading that for the risk that you may have the price that you pay for that insurance go up in the future. So we set out to find many years ago a guaranteed option, and that is the hybrid long-term care plan. So let's break that down quickly, sort of how it works and how that tool benefits a consumer for 10 years.
So what
And for
hybrid
that,
long-term
they're
care
going to have a
insurance is,
long-term
the
care
reason,
benefit
hence
on
the name
day
hybrid,
one
it's
of
combining
something like three hundred
long-term care
fifty thousand
insurance
dollars,
with
and
life
then that
insurance.
number grows,
So
guaranteed,
the long-term
compounded
care
every
insurance is
year.
very
So
similar
that by
to
the time they need
the
long-term
core
care,
long-term
average
care
claim age, I'll
policies.
commonly see benefits that are up
But it
eight, nine
has, if
hundred
you die in
thousand,
your
even a
sleep and never
million
use it, there's
dollars.
going to be a life
And
insurance
so think of
benefit
that like a
paid
bank
to your
account for
family
long-term care expenses of
tax-free.
$1 million
The funding
when you're in your,
mechanism is you
80s,
can
for
either pay a
instance.
one-time
Of
payment
course,
and
it's
it's
going to be
paid off, or you
specific
can
to
pay
every
the premium
person's
over
case,
five or
but
ten
that gives you a
years. But
million
whatever
dollars you
payment
don't
method you
have to set
choose,
aside for
the
long-term
premium you end
care
up
by
deciding
just,
is fixed.
trickling
They
that
can't
premium out
change it.
over 10 or
And then
12
once
years
it's
while
paid
you're
off, it's
working.
paid off. And you have permanent long-term Yeah, care insurance for exactly. the And rest of your then, life. the And question that again, comes to if you never mind end up is, needing long-term care, it's a they'll pay a great life product, but insurance, is it appropriate usually for equal to everybody? your And the answer premiums is paid no. plus I mean, it's going to 20
Yeah.
to
Yeah.
be for a 50% slightly higher net worth client. tax-free. I'd
Yeah.
like
Yeah.
to
So
see
just to give
clients who
like some
have
generic
maybe
numbers, some general
a
numbers,
quarter of
we will
$250,000
commonly
plus of
see a
assets
policy where
before
someone
you
may
want to
pay,
start thinking about a hybrid long-term
$100,000
care
up
plan.
front or maybe
Because
10,
traditional
12,000 a
long-term care
year.
insurance has its place, because if you don't have a whole lot of assets, you probably don't need to be putting in large sums of money into it. So I'd say $250,000 plus, you might want to compare the two. And that's what we do. We'll show you the hybrid plans as well as the traditional plans. But we're finding, we did some research before we did this video. Probably 10 years ago, maybe 5% of our cases were hybrid long-term care insurance. Now, I think last year, 75% of our cases were hybrid long-term care insurance versus only 25% were the traditional, because that demand for a guarantee fixed price is there, and that's why a lot of the clients are moving that direction.
Yeah, and we even searched our email for like when did we first really start interfacing with these products, seeing them in the marketplace, and it was, early 2010s. And,
Yeah,
a lot of people
wow.
watching this, they might have friends or family who have one of those older policies. And the one takeaway would be that the plans have significantly improved for a lot of cases over the past 15 years because the companies, they're competing fiercely. We have half a dozen A plus or better rated companies offering these policies. And so we've got things that we didn't even have 10 years ago, like cash indemnity benefits. Some of the plans are joint or shared policies for couples. There's a lot of innovative things that are happening in the hybrid space. So you get a guaranteed policy locked in with some features that you can't even get on a traditional, which explains why it's three-quarters of the market. Having said that, I just was talking to a doctor the other day. He has fantastic income, several $100,000 a year, but through various circumstances in his life, his assets weren't high enough to really warrant a hybrid policy. So we're pivoting him back to traditional. So, like you said, Derek, really what someone should do if they're not sure is just pick up the phone and give us a call or request a quote from us. It'll be either you or I or one of our assistants. Nine times out of 10, we can quickly have a conversation and help somebody determine what is the best option, if any, for them to take.
Yeah. So if you're watching this video, you want to get more information on long-term care insurance or hybrid long-term care insurance, click on, we'll put a link in the description on the video below, or call us. We will pick up the phone often if it's during normal business hours, and we're happy to have a conversation with you.
Yep, absolutely. So we'll wrap this one up. Thanks for watching, guys. We'll see you next time.
All right. See you guys. Bye.